Morning, everybody. This is Garrett with GSG giving a update on the market this morning. I'm currently down about 50%. If you had plans on buying, the perfect time to buy was the end of yesterday, actually. This morning, the market is starting a new rally. I know we spoke before about each time that the market goes goes down. It has a monthly correction or a 60-day correction where it would go down to some lows where it'll give investors another opportunity to start pouring in those funds. Yesterday, day before that was the days to do that. So, good morning. Good morning. The Dow jumps more than 600 points, and Wall Street rebounds from the biggest sell-off since March. After the chair, the Fed chair Jerome Powell, after he speaks, he he normally get people to sell off before he comes on, and then a little while he's on, and then after he goes away for a day or two, that's when people start getting back into that market. Look out on, you can check your Yahoo Finance, your Google Finance, um, and any CNBC news, especially on a Tuesday. On a Tuesday, if the federal chair is going to speak, Fed chair is going to speak. Normally, when he speaks, stock market seems to take a little dip. So, good morning, good morning. So, like I said, yesterday was a perfect time to buy on those dips. I took and I highlighted a new watch. I added to the watch, my watch list. If it'll let me go down a little bit. So let me go over here. So I highlighted in my watch list. Um, there's another company, and it is not messing with me today. Nope. Let's see if Yahoo Finance will show it. It's a new company called the Genius Brand International Incorporated. Um, they're selling right now at $4.24. Right now, 25¢. This is an actual entertainment brand. They specialize in like kids media, and they're based out of California. I highlighted them because they're expected to go down below $2 within the next 60 days, according to a analyst algorithm that I used yesterday. So I was checking out some new companies to purchase, and I was doing a little homework. This company came out in, I want to say 2006, it might be 2008. Let's check them out. So they're currently at 120, 420, 419. Yeah, 2006. They were founded in 2006. They're based out in Beverly Hills, California. Genius Brand International Incorporated common stock, also called Genius Brand, is a content and brand management company which engages in developing, producing, marketing, and licensing branded children entertainment properties and consumer products for media distribution. So on their 52-week high, they're currently at $11.73 right now. Their high for today is 480. I'm gonna jump in and start putting some aside to start buying them up, and I'm gonna buy at least. I'm gonna start out with five shares of this company, but they're expected to get big because things have been on a pause for such a long time that uh, media, entertainment, and sports, they about to hit the ground running, and they're about to go full speed to try to make up some of the economic laws. So a lot of investors are going to start pouring a lot of money into these certain companies. So we could see them going up to around $20 a share before the end of the year. But within the next 60 days, they are going to go below $2. So once they get around $2, that's when I'm gonna buy them up. Top movers within the last 24: Liberty TripAdvisor, Genius Brand, what we just looked at, and fuel cell is energy and petroleum. Gas is starting to go back up. So remember those gas companies or petroleum companies. If you bought any, remember this summer is going up. I actually got a put option on some gold, and I bought these put options at 2 cent a piece. Right now they're at 3 cent a piece. Purchased them yesterday, and I think they went up as much as 5, and I didn't sell them. I'm holding them into next week. Expiration date doesn't expire to the 19th. I have one play of Oracle saying that it's going to go up to $55.50. They not quite there. I think they're around 52. Yeah, almost at 53. Oracle has a earnings reading on, I want to say it's the 16th. So between today and the 16th, this company is expected to go up. They probably won't turn it up until or pour into it until the end of today or at the end of Monday's market day. So I'm gonna hold on to this today, and then if it doesn't get any bigger than this, I'm gonna sell it. But I plan on buying some more on Monday. Uh, Options just to sell. Uh, Normally when a stock is about to have their quarterly earnings reading, they typically go up. So if we look at this week, um, we already seen not Nvidia, but Adobe. They went up this week after they did their quarterly earnings report. And I'll just show a little example of that real quick. I think Adobe was already trading big before the last 2 days. Yep. So they're nearly at $400 a share. Yeah, they started out this morning at 409, went up to 410, and had a slight drop. But if you look at their week, right before their reading, they was hovering around four, and then they went up to 409. So they went to 409 before they dropped back down, and this is due to their quarterly earnings reading. Their actual reading date was on the 11th. which was yesterday. So typically around their quarterly earnings date, they rise up, then they have that fall. Then they have that fall after the reading. So we look at next week. Next week, week 25 of 2020. Quarterly earnings report is coming from Oracle next week. And right now they're trading at 52.88. They need to go ahead and shoot up $4. Go ahead and shoot up $4 for today, so they can show us how this works. Yep, that's what they need to do. But I can see them hitting $54 by the end of the day, end of the market day. That'll give us a little gain, not a lot. Also, in the quarterly earnings reading, we got National Grid. They're trading at $9 right now. National Grid. There's another company I was looking. Oh, Kroger. Kroger has their earnings on the next Thursday, the 18th. Kroger stock actually went up a lot during this season because they were one of the essential places open in our region. China Gas Holdings and Wirecard. A lot of these companies, I don't know. Leonard Court. They're actually in the New York Stock Exchange. Don't make me see what they do. Let's see what they do. Let's go to Lean. Leonard. See what type of business Leonard does. Company founded in 1954. Got a dividend yield. It is a home builder company which engages in provision of real estate related finance investment. Okay, so they $10 away from their 52-week high. Let's see what their track record has been like for the 5 year. So that's the top of the mountain right there. So that's all I got for today. I do plan on buying some. Let's see what else is on this. So all of the stocks that I purchased that I'm holding, they're all in the green right now. They all started above that perforated line. These are the stocks I plan on holding for a year or two, or maybe more. Um, let's check some American Airlines. See, 90% slump in second quarter revenue. Yeah, of course, because when nobody traveling. America says it has more collateral for borrowing. Borrowing? Do we really want to borrow? So on that note, before I get up out of here, I want y'all to remember the book of the week. Book of the week is Compound Effect. I'm gonna put up another book next week. This is actually a good read. It ain't so boring than other economic books. But before I get out of here, I'm gonna play a little. Here, I'm gonna play a little bit of news. See what's going on in the market today and in live. How about it?
Think the economy's getting better?
Trade TV.
Well, look, the better in the third quarter. We're going to get this reflexive rebound. I mean, the Atlanta Fed right now, the nowcast forecast for second quarter is like negative 48% in annual rate. I mean, we had an absolute deflationary detonation in the second quarter. So there's going to be reflexive rebound. There's no doubt about that. But the outlook is very uncertain. You know, that's what the stock market didn't want to hear from Jay Powell. Is beyond the reflexive rebound, he has no visibility. What I'll say to you is that there is not going to be a run up in interest rates without there being inflation. And the output gap, the supply demand imbalance is so huge, it's going to take years to get there. And you know what's interesting is that the San Francisco Fed 2 months ago did a whole report on 15 pandemics back to the past 500 years, and found that there's aftershocks after the earthquake, and they are deflationary, and you end up with a huge savings investment imbalance that lasts for years, that take interest rates down even past the worst point. Like I would say, you know, is there a risk that interest rates could go up for the next, say, 2 to 3 years? Well, there's always a risk, but I wouldn't make that a base case scenario. I think that the base case scenario is going to be that interest rates out the curve are going to be moving lower and lower over time. We're not through this deflationary situation, even if we get past the worst point of the eye of the hurricane. Just the output gap is just too big. We're just got to climb out of this hole. I mean, look at the Fed's forecast. It's going to take years just to get back to the starting point. If you look at what the CBO told us the week before this week, they said it's going to take 8 years. In their forecast, 8 years to get back to the starting point from the pre-crisis trajectory in GDP. So the odds that we're going to get interest rate increases on a sustained basis, I see that as a very low odds event. This is going to be much more Japanese in nature than people believe.
Yeah, I mean, in effect, though, Dave, that means believing that the consensus got it right, because bond inflows have been massive into investment grade bonds, and it's interesting to hear you sort of putting faith in.
So, what he just said was he lost some money, and it's going to take him 8 years to get some of that money back he lost.